Welcome back to today's morning report chart appraisals on Friday the 2nd of September with me, Richard Perry, market analyst at Anton Markets. It's Payrolls Friday, and don't forget my webinar that I have on which you can sign up on the website. I'm going to be talking about cable in that webinar and how it moves on the back of the payrolls report. Now, the technical analysis ahead of the payrolls report has turned relatively more positive because it's basically broken this sequence of lower highs. Now the 3270 reaction high is not a key reaction high because it didn't in the correction it didn't move below the previous low. So it's not ultimately a big reaction high, but it is still sort of a move that reopens not only this 23.6% fib level 33.20. Interestingly enough, 33.17 was the high yesterday before turning lower, but also it sort of reopens 33.70, which pretty much is another reaction high that is relatively important, but again not key. So I think basically what we're seeing here is cable trading sideways in a range. So having broken that sequence of resistance or lower highs, you now looking at cables thinking, well, this is basically a sideways move in the last sort of two and a half months. The pivot line around 30.60 is still in play, I believe. Certainly with the support that we saw the other day, a few days ago. But breaking out above that 32.80 level, which is this reaction high here on the 26th, that has sort of reopened upside potential. You look at the momentum indicators too, and you'd think, well, okay, the RSI, having previously sort of found resistance around the 50 mark, is now sort of pushing out higher, and it's at the highest since it has been since Brexit. Also, the MACD lines are back to neutral, and the stochastics are relatively positive still. So you'd sort of say that the near to medium term outlook is actually relatively neutral, and sort of reflective of this range really. So I think that moving into Powell's report, we're still reasonably positive, and the near term outlook is turning positive again, because you've moved back above, certainly the breakout above 31.60, which was sort of a bit of a pivot line really. I mean, yes, you had a bit of a move above that 31.80, but to be honest, 31.60 has been a bit of a pivot over sort of the last couple of weeks really. And breaking out above that, I think you're now sort of relatively positive. So you sort of drifted off a little bit. You'd sort of look out for the reaction low 32.30. You had that strong candle on the UK manufacturing PMI yesterday, slightly sort of supported at 32.30, and then since then you sort of had that strong candle on the US ISM disappointment, but then subsequently a bit of a consolidation really, and that consolidation is likely to continue in front of payrolls really. So initial support 32.30 on payrolls, 31.60 I think is more important as a near-term support. But then obviously you get the key supports that come in around that 30.60 mark, which again, as I said, is the sort of daily chart pivot line. So a few levels for you to work with there, but having broken up above 32.80, you're now sort of looking at this 23.6% pivot, 23.6% Fibonacci, and also 33.70, which was this early August high. So I wish you good luck in your trading today, and I will speak to you later.